Nvidia secures $500 billion AI funding from Wall Street. Apollo and BlackRock are not just funding data centers, they are financing the demand that justifies Nvidia's valuation multiple. The real pressure appears when those loans mature in 2026, and the borrowers must show sustained revenue growth just to service the debt. Nvidia then faces a choice between price cuts or watching utilization rates drop across its ecosystem. This forces Microsoft and Google to either absorb higher costs or slow their own build-outs by early next year. OpenAI completes $7 billion employee tender offer. Self-funded buyback at that scale signals the board wants liquidity without diluting control ahead of any public listing. Employees who sold now face tax events that could push more departures if the next tender is delayed past 2025. That timeline puts pressure on OpenAI to deliver revenue growth that supports the current valuation without external capital. This forces Anthropic to match the tender terms or risk losing key talent to a competitor with fresh liquidity. Intel raises $20 billion in stock offering. The capital is pitched as strengthening process technology lead. The opposite is true once the shares hit the tape and existing holders see heavy dilution at current prices. Foundry customers will now question whether the company can sustain the required investment levels without repeated equity raises through at least 2026. That doubt hands Samsung and TSMC an opening to lock in more wafer deals before Intel can prove the new nodes are on track for customers. Meta plans open source release of Muse Spark 1.2. Meta's move undercuts the pricing power of every closed model API on the market. Developers can now run the smaller Glimmer variant on local hardware without usage fees or data leaving their premises. That shift will force cloud providers to justify their margins against free alternatives starting this quarter or lose developer mindshare rapidly. Enterprise deals that once defaulted to OpenAI or Anthropic will now face internal benchmarks against the open weights instead, changing procurement cycles by next year. Anthropic signs $9 billion cloud deal with Riot. Power from repurposed mining sites arrives faster than new builds allow. The deal structure likely includes priority access clauses that competitors cannot match without similar hardware tie-ups. Expect OpenAI and Google to accelerate their own co-location deals by mid-2025, or watch training queues lengthen as megawatts tighten. Data center operators now face bidding wars that push lease rates higher across regions, squeezing margins for smaller AI labs lacking direct infrastructure relationships with energy providers. Anthropic launches data center partnership with Macquarie and GIC. Asset managers are now shaping data center build-outs in ways that alter capital structures across the entire AI sector. Macquarie and GIC bring pension and sovereign capital expecting steady returns instead of venture multiples. This forces traditional cloud providers to either match those financing terms or lose ground when new capacity comes online. Smaller labs without comparable backing will see their effective compute costs climb steadily as those financing terms tighten through next year. Applied Compute discusses $3 billion valuation round. Revenue growth at that pace rarely sustains without major platform shifts from customers. Applied Compute must now deliver enterprise features fast enough to justify the multiple before growth normalizes. Rivals like CoreWeave face pressure to either cut prices or bundle additional services to retain accounts. A single missed quarter on the ramp could trigger investor demands for concessions that reset the valuation conversation entirely within 18 months. Sila secures $1.4 billion Pentagon loan. Government loans at this size usually come with production milestones that private investors avoid. Sila can now lock in supplier contracts that pure venture rounds could not support. Competitors such as QuantumScape must either pursue parallel government funding or accept slower factory ramps that cede market share in the next 2 years. The move also signals to other battery makers that defense channels offer faster capital than traditional VC for scaling physical production. Unitree Robotics IPO values company at $9 billion. Beijing just locked in fresh capital for its leading humanoid maker, yet the real pressure lands on American integrators, who now face restricted access to those same motor and sensor suppliers. Within 18 months, expect domestic robot programs to either redesign around Chinese parts or absorb 20% higher costs from alternative vendors. The trade war and the automation race have merged into one supply constraint that will force at least 2 US startups to delay their 2026 deployments. Archer acquires rival Whisk Aero. The acquisition ends the courtroom fight, but hands Archer a portfolio of disputed patents that will complicate certification paths for every other eVTOL developer. Joby Aviation must now decide whether to license the technology or push its own designs through a longer regulatory queue. This forces the remaining players to accelerate their own consolidation moves before similar suits surface. Expect the first commercial routes to slip into 2027 as legal challenges multiply across the sector and delay passenger service launches. Monday.com forecasts Q3 revenue growth slowdown. After cutting staff, the growth miss still signals that mid-market teams are pausing expansions rather than switching platforms. Watch for Atlassian to cut Jira list prices within 2 quarters to protect its own install base from further erosion. The sector's expansion era has given way to a retention game where every renewal now carries heavier discounting and pushes ARR growth below 15% across the category by next spring. Smaller rivals will feel the squeeze first in their core segments. Microsoft to increase next-gen AI chip production. Scaling its own chips next year keeps the CapEx line elevated through 2025, even while Nvidia bills shrink. This forces Nvidia to either match the custom performance or watch its Azure footprint erode faster than expected. The margin benefit only appears once enterprise SLAs force Azure to guarantee performance across mixed silicon fleets. Cloud customers will demand those guarantees before any price cuts materialize. Near-term investors should focus on the sustained hardware spend line rather than the eventual savings. Amcor considers stake sale in $1.5 billion China unit. The real pressure comes from Washington's latest packaging restrictions, which now treat certain Amcor processes as controlled technology. A partial sale could hand operational oversight to a Chinese partner, triggering fresh licensing reviews for every US customer. Nvidia and AMD must now map alternative suppliers in Taiwan and Malaysia by early next year, or accept longer lead times on their current chips. That timeline collides directly with their own AI ramp schedules. Visma reports 19% revenue growth in first half. Buyers in the mid-market are already seeing Visma bundle payroll and procurement into single contracts at margins competitors cannot match. That bundling strategy leaves less room for point solutions from smaller vendors. Sage will need to decide whether to defend its existing Nordic install base with aggressive renewals or cede ground on new deals. Either path compresses their European software margins within the next 2 quarters. Cambridge Aerospace hits $3.4 billion valuation. Cambridge's valuation now sets a new floor for any European sensor or propulsion startup seeking Series C money. Ministry of Defense program officers will face higher unit costs on the next radar refresh if they stay sole source. At the same time, Pentagon acquisition teams gain leverage to demand technology escrow clauses that keep critical code outside UK jurisdiction. Those clauses will appear in the next bilateral agreement within 18 months. Revolut granted French banking license. Incumbent French banks now confront a licensed competitor that can hold deposits and extend credit without relying on partner banks for settlement. That shift lets Revolut target payroll accounts directly, pulling transaction data that improves its lending models overnight. BNP Paribas and Crédit Agricole must accelerate their own app upgrades or watch share of new checking accounts slide further in the Paris metro area by next summer.